so yeah, I think recession second half. I'm not predicting a depression at this point. I think that comes later in the decade with the 100-year cycle, just like COVID and the Spanish flu. But I think this is the beginning of that table setting for it.
Gareth Soloway is a person of notable achievement and expertise in the field of finance and investment. He has demonstrated a comprehensive understanding of financial markets and has a reputation for making insightful and accurate predictions about market trends. According to various media reports, Soloway has suggested that a recession is possible in the near future due to a number of factors such as rising interest rates, increasing debt levels, trade tensions, and slowing economic growth. While Wall Street Journal found 1/4 of their respondents placed the probability of a recession in the next 12 months at less than 50%. As per Soloway, we've seen inflation coming down, and we've seen the banking crisis really continue with today's takeover by JPMorgan of FRC. The Fed is aware of this. They don't want to stop too quickly on the hiking side, so they're going to likely hike by 25 basis points next week. But the Fed may be looking to pause. According to Soloway, the issue for the markets is that the market has always and investors have always looked at it and said, hey, the Fed will bail us out if we get into trouble. The problem is in the past 15 years, inflation was sub 2%. We're now at a point where inflation is north of 3%, 4%, 5%, and the Fed can't bail us out. Before proceeding further in this video, make sure to hit the subscribe button below for more recent updates.
When you have a baseline, right? If you just keep recession, so the booms are just a little up, then the recessions are a little down. It's when you stimulate, you create the huge bubble, which in response then has to have the big downside as well. It's just the nature of life, right? I mean, if you're going to do a lot of drugs, you're going to have a big crash on the other side. I mean, it's the same kind of principle there. So definitely 100%. I do see a recession coming in the second half of this year. I'm looking at it in terms of the jobs data. We're starting to see that crack in the last report. I think we get another one next Friday. We've seen the inflation numbers come down, but not enough to enable the Fed to step in. And that's the key, right? So, getting inflation from 9% down to 5%, easy, right? I mean, that's just, supply chain starts to work again, all that stuff. It's that last, 5 to 2 that's going to be the trickiest thing. And I think that's where people in the market, for me, I look at the stock market. I'm slowly moving in more and more into the short side of the S&P and the NASDAQ. And that's purely from the aspect of investors are in this phase of saying, okay, the Fed will rescue us no matter what, because we've been conditioned just like an animal. The bell rings and you run to get the food. That's the way the market investors are. The Fed, the difference here is that with inflation north of, let's say, 3%, I don't see how they stimulate in the same way, because then they're going to send inflation to 20%. Instead of 9, it's 20, right? And so that's going to be a shock for the investing public when they finally realize the Fed can't bail them out. Now, it's not to say the Fed's not eventually going to come to the rescue. We know the Fed is notorious for moving goalposts. Eventually, 3% inflation will be fine. Eventually, 4%, and it'll just become the norm. So
Soloway believes that de-dollarization is a real and ongoing trend in the global economy due to the rise of China as an economic superpower, which concerns about the long-term stability of the U.S. dollar as the world's reserve currency. The U.S. dollar's dominance is being challenged on several fronts simultaneously, from countries choosing to conduct trade in local currencies to BRICS developing its own currency. China and Russia, in particular, stepped up their efforts to ditch the U.S. dollar. There is no doubt in my mind that we're headed towards a different reserve currency, Soloway predicted. For me, in 10 years, I don't think that the U.S. dollar will be the reserve currency. It'll still be a major currency, I just don't think it will be the main currency anymore.
I mean, number one, de-dollarization is definitely happening. I think there's a lot of fear that's spread around because of it. In reality, am I making a trade today on the collapse of the dollar? No, right? I mean, am I tucking some gold away? Yes, gold, silver, metals, Bitcoin eventually, absolutely. But it's not something that is going to happen overnight. You're not going to wake up tomorrow to a dollar being worthless. We're not Weimar Republic, right? So I think that's something that people have to hear, because I've seen so much on social media panicking about this. I had a friend that I hadn't heard from in years message me, hey, do I need to exit all my dollars? And it's like, not quite yet. I mean, it's one of those things you need to understand is coming, but it's not like a do or die scenario right now. Now, having said that, there's no doubt that China wants to be the reserve currency of the world. They're trying to destabilize this by working with countries all across the world to start trading in digital yuan. We know Saudi Arabia is doing trading in oil and so forth in other currencies as well. So it's coming. It is in process. It's just not going to happen overnight. And the way you know that, by the way, is when you see fear hit this market, the stock market, where does the money go? It still goes back into the US dollar, right? So as of now, that's the case. But again, every investor out there needs to be aware that this is happening. The dollar will slowly become the non-reserve currency of the world, and you will see the dollar lose power due to that. And by that meaning the US will lose power as well. We know that the US uses that as a reserve currency to maintain order that they see fit and control, and that will slowly slip away. China wants that control. If you look historically at the reserve currencies over the last 500 years or longer, there's a time life, right? There's a lifetime of a reserve currency, and we're kind of right at the end of that for the US dollar. So number one, that's just the nature of it. And by the way, it's not that there's a time frame on it. It's just that countries do not have the discipline to not print their own currencies. You know, when you have the crazies running the crazy house, they're going to do whatever they need to do to maintain power, which is printing money and so forth. So it's just the nature of human nature, Frank.
However, recession fears could lead to softer industrial demand, which may cause silver prices to drop as low as $18 per ounce. While most of the effects of a recession are negative, one positive is that gold prices tend to increase. At the same time, an impressive supply of sellers is preventing the price of Bitcoin from fixing above the psychologically important $30,000 price. For trading Bitcoin over the next 2 to 4 weeks, we are slightly bearish. That means we expect stable to falling prices. However, we also think Bitcoin is a good long-term investment for the next 1 to 3 years and are bullish overall.
I'll take the under on the NASDAQ. I say short NASDAQ, long gold. I'm agreeing with you. Bitcoin, next 6 months, I still think it's headed lower first, so I'll take short on the Bitcoin. Silver, for me, it's a trickier trade. Gold's the pure play. Silver has industrial side to it, so if we do hit a recession, it's going to be a little trickier. Longer term, I think silver still goes up. It's just a trickier play in the near term. I would say short Apple, short Nvidia. I think, again, you're looking at a recession second half, and some of these valuations on some of these NASDAQ stocks have gotten ridiculous again. I would say short Pepe. I would say you know, these crazy crap coins that are going right now is a huge concern for me. It's not a signal of a bottom, it's a signal of a top. So just people out there, be careful out there. There's a lot of crazy pump and dumps going on.
Forecasters have modestly upgraded their outlook for the economy and job market, and they now expect a recession to begin later in 2023 than they had thought. While Bitcoin continues to form triangles in the short term and has a reasonably clear support line. On this note, we conclude our video. Do you agree with Gareth Soloway's perspective about upcoming recession and de-dollarization trend? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.